Yes, it's that time of year again. It is tax time, and I am sure you're having just as much fun as I am getting your taxes ready, right? Well, today we're diving into an important topic for landlords in 2025, and that is what can you do to help reduce your taxes? Hi there, I'm Sue Richey, and thanks for checking out my channel. If you're new here, we talk all about things property management and best practices to make your rental property the most profitable and efficient that you can. First, I wanted to point out that I'm not a tax advisor or an accountant, and I'm just giving you this disclaimer here. But what I'm going to talk about today is just based on my conversations with lots of professionals over the years and different tax advice that I've gotten. I wanted to share 3 top tax tips for you so that you can do the best you can to prepare your taxes for this year and hopefully save some money. So number 1, let's take advantage of bonus depreciation changes. Now, what is bonus depreciation? It essentially allows rental property owners to deduct a certain large percentage of capital improvements in that same year that they were made. Now, this has changed in 2025 and gone down over the last couple years and will continue and probably be phased out, from what I understand, by the end of 26. So when you did your taxes last year, you were able to deduct 80% of large capital improvements as a bonus depreciation. This year, when you're doing taxes for last year, you can deduct 60%. Next year, I believe it's going down to about 40%, but this is something you want to check with your tax advisor on. But it's still a great way to take advantage of some of those large expenses and capital improvements that you're going to make on your property. So ask about this and make sure that you maximize the deduction that you can take so you reduce your taxes overall. So if you're planning any big purchases in the next few years, do them sooner than later, because this percentage deduction is just going to decrease over time. So get those in sooner than later and save yourself a little bit of money. So let's say that you're a landlord and you've purchased some new energy efficient appliances for your rental property. Now, the total cost of the refrigerator, washer and dryer, let's say that comes to $5,000. With this bonus depreciation, let's say it's set at 60%, this year you can deduct $3,000 from your taxable income. And that certainly helps, right? This reduces your overall tax liability, giving you a lot more cash to reinvest into your property or into another business. It's a great way to save money while keeping your property in really good condition. And remember, bonus depreciation doesn't apply to land. It's good for the big things, like I said, like capital improvements. So be sure you keep all of those receipts well organized. Okay, the second tip I have is to not miss out on those energy efficient home improvements, that credit. So let's say you want to go green. Definitely going to save yourself some money too. In 2025, the IRS wants to reward landlords for energy efficient upgrades. And this is continued. This includes things like solar panels, energy efficient windows, and insulation. If you want to find out more about windows in your rental property and what you need to look for, check out this video I did with one of our wholesalers that we work with locally for new windows at affordable prices that we can offer to our landlords. This energy efficient home improvement credit can cover up to 30% of the cost. If you've been thinking about upgrading your property to make it much more sustainable, then now is definitely the time. This will lower your taxes, but also it can make your property much more attractive, especially to those environmentally conscious tenants. And the third tip I have is to really understand the qualified business income deduction. I know that's a mouthful. So first, let's talk about what this actually is. QBI is what it really is shortened to. And what it means is if your business activities qualify as a trade or a business, then you can deduct up to 20% of your net rental income. So in order to take advantage of this, you definitely need to show that your rental activity is more than just a passive investment. This means that you have to document the time spent managing the property. You need to think about maintenance and tenant communication and all the time spent doing bookkeeping. So let me give you an example. So imagine you're a landlord who spends significant time managing your property all by yourself. You're doing all the tenant screening, you're handling all the repairs, and you're doing all the maintenance, and you keep really good records. Your rental income after all these expenses, let's say it comes to $50,000. So if your rental activity qualifies as a trade or a business, you can claim this QBI deduction and reduce that taxable income by 20%. So in this case, $10,000. That's nothing to sneeze at, right? $10,000 off your taxes can help you use that money for other significant things. So you want to make sure that you stay really well organized and document your activities, money spent, all of that, so that if you take that deduction, you can justify it and have really good documentation. So here's a tip. Make sure that you keep detailed logs of your landlord activities if you're self-managing, because this really could make a huge difference in whether you qualify for the QBI deduction or not. And there you have it. As we're all in the midst of tax preparation season right now, these are really my top 3 tips for rental property owners this year. Bonus depreciation, energy efficient upgrades, and that QBI deduction can all save you some serious money. So know how to use them. If you don't know and you have a tax advisor, or if you don't, definitely seek out that advice, because it could, even if you're paying for that advice, it could save you a lot more money than what you pay, so it's worth it. I know for sure that our tax accountant has saved us a ton of money and a ton of headaches, and has opened our eyes to a lot of things that we wouldn't have necessarily known. So get the right advice, get the right professional, because it will pay off. So I hope this has been helpful, and I hope it will inspire you to, do some of the nice upgrades and take advantage of that while there's still some decent deductions out there. So thanks for watching this video. And if you are interested in checking out more information and diving deeper into other tax benefits that landlords have, then check out this video. I did a webinar with our CPA, and we went into a lot more detail, so you might find that interesting. So until next time, happy renting, good luck with your taxes, and hope to see you back at this channel again.